Welcome to Why Voices to all my young investors. Hey guys, I want to just jump into something real quick. I want us to look at the SPY, SPY, today. Uh, Not because of the stock going up or down, but because I want to show you guys, especially young investors, as I pull it up on Robinhood here, I want to show you guys a couple things that you guys need to be able to focus on and look at whenever you look up things like the SPY, the QQQ, the VOO, things like that, ETFs, dividend stocks, stuff like that, where we learn how to compound our money and grow wealth over time. But I want to bring this up today just briefly. I pulled it up on Robinhood, and I want to bring this up because if you look back a year ago, because I always teach you guys to go left, well, we're going to go back 1 year ago. And roughly, if you can look back, we saw an all-time low back here at 558.80. But over time, see how over time it grew and grew. It had some ups and downs, some valleys in it. And then if we go back year to date, we can still see, that it went from the 558, and then, that was just a year ago. It was up at 687.72, going through the ups and downs of the valley, and then it crashed back down to what was that? A low of, I think it's a low of what is that? 631.97. I'm just showing y'all this real quick because I want to show you something else a little bit later. And then if we click here 3 months ago, we see it at, it's been running roughly, in the sixes. And then, 3 months ago, a month ago, we see the trajectory of it now starting to go back up. Okay. And it ran all the way a month ago, a week ago. It was a little shaky, all week long, but still it rallied at the end of the week and ended up around 713. Okay. And then one day, I think it ended last week at 714. And that's all good and dandy and everything, but that's not really why I want you guys to see this. I want to go ahead and open this up a little bit so you guys know that when you guys get on these platforms and you look at this SPY, the QQQ, I want you guys to think about opening it up. And if you open this up a little bit, you can see that there's a breakdown on how. This is the top 500 companies, okay? There's a breakdown on how these companies is put in this ETF. And if you guys look at the breakdown, it's 35% technology, 11% finance, 10% communication, 10% consumer, was that 8% healthcare, 8% industrial, okay, 4% consumer defense. And you guys can always open it up, See how I'm opening it up? This is on the Robinhood platform. You can open it up, okay? And when you open it up, you can get you some information here to learn about this ETF, okay? Yeah, learn about what you're investing in. Well, you can open it up. That's another thing you can do, okay? And but what I really brought you guys here this morning to really share is if you go down a little further, You get to find out what's inside this ETF, okay? What's inside this ETF? And when we really open it up, we see that inside this ETF, now it's going to tell us the top players inside the ETF, which is NVIDIA, huge, Apple, I showed y'all the breakdown earlier, Microsoft, Amazon, Broadcom, Google A and Google C, okay? And then there was another one down here. If I can get my cursor to act right. Oh, Meta. Meta's off us in there. And then it's got like Berkshire Hathaway and I know there's a final. If I can get my cursor. My cursor's not acting right this morning. But my point in bringing this to you guys' attention is whenever you break down these ETFs, so guys, and it shows you the top players in the ETF, like NVIDIA, Apple, as you guys can see, Microsoft, etc., blah, 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 blah. I want you guys to think about if they're the top 10 ETFs, top 10 businesses in the ETF, this is a great opportunity. This is called what you call a cheat code. Yeah, these are the type of companies you need to be investing in. Because our model is we only put our money in great companies with great balance sheets. And so what you guys do is you write down this particular list instead of scrambling and looking all over all through all these millions of companies that's in the stock market. No, you narrow it down to these guys right here. And then you do the research on these guys. And I recommend that these are the top type of companies that you guys buy and invest in. And then you start buying these type of companies on the dip. And it's going to make your investment journey a lot more fun and exciting. And you guys will be able to make a lot of money a lot sooner. Okay? So that's the only reason I want to break down the SPY. SPY is the ticker symbol, which is the top 500 companies in the US of A. And from picking that out, it's going to give you, when you buy the SPY, it's going to give you steady growth. You're not going to have to worry about losing money. And if you guys buy it on the dip, we saw it back there at $558. Now it's closing off at, I believe, around 714. That was last year. So it has grown tremendously. If you'd have bought it back then at $500, you'd have made a lot of money on the SPY. But the main thing I want you guys to understand is you can open that bad boy up. You can open it up. It'll break down what's in it. Okay. Technology, consumers, healthcare by percentage. Okay. You can open up the ETF, and learn more about the ETF. Not only that, you can go down here and find out what's in the ETF. And it's going to usually give you about the top 10, sometimes the top 12 players that's inside the ETF that's giving you, the young investor, a clue to some of the great companies that you need to think about investing in here. These are all big time companies, okay? And so this is the way I want you guys thinking when you start to invest. Because if a company like Apple goes up You put $50 in Apple and it goes up, 75% this year. It doubles, it triples. You just doubled and tripled on your $50 because you do not have to buy a whole share. You guys can buy fractional shares in these type of companies. Okay? Now, if this type of video helped you out, okay, subscribe it, like it, share it to your friends so more young adults can start investing. And if you have not downloaded the Stash app, some of you guys are 16 years old. You have to be 18 years old to invest, but you can download a Robinhood app, a Stash app, a Weeble app. One of these apps, you can download it on your mom's phone. Hook it up to your bank. That's the hardest part of investing is getting started. Hook it up to your bank. And then you and your mom and you and your dad start buying you some of these companies, okay? NVIDIA, Apple, Microsoft, Amazon, Broadcom, Google. You guys will not go wrong. Your money be growing from the ages of 16 to 18. And when you turn 18, now you can go ahead and download the app on your phone, hook it up to your bank, and transfer that money that you invested while you was in 16 into your own account. And by you guys following and picking up these type of tips, 2 years from now, you guys are going to be a lot more smarter investors. So if you would, hit the like button, hit the share button, subscribe, pass it on to your friends. I'll be talking to you guys soon. Love all y'all.